Hi and welcome to this live currency strength indicator table video with me, John, on this 10th of May on the Wednesday. And in this video, we're going to be taking a look at Kiwi yen. We've actually seen the yen come back onto the tables, giving us a potential signal for the price of Kiwi yen to continue to trade to the upside here. So the reason why I say we have a confirmed signal now is because Kiwi was on our tables from yesterday. If I just scroll down, I know it's a little bit hard to see here. Let me just expand this out. If we just move down to our rolling data, you can see that we had Kiwi on our tables yesterday. We had them on Monday as well. So we know that the Kiwi is strong, and that's a currency we could potentially buy against a weaker currency. Now, what we like to say is, okay, we've got the pre-signal with the Kiwi, but we're waiting for a currency to then appear on the weak side of the tables. The yen has just done that. So the yen is now W3 here on our day traders table, and as you can see up here as well on our trend traders, it is the weakest currency. So that's telling me that there's potential for the yen to start to weaken again. So if I bring in our New Zealand yen chart, what we can do is have a look at the technicals and see where price is at, to see where we can best try and take advantage of this momentum. Now you can see that we're kind of trading in this larger range here between the 88 highs and the 80 spot 75 lows, and we came towards the 80 spot 75 lows around about the sort of 23rd of 24th of May or March, sorry. And prices then continued to press higher. We then found resistance up at these highs, which formed back at the start of March at 85.25. We rejected them, came into the previous structure highs at 83.50 before then rallying through that 85.25 resistance. So now that we're above the resistance, what we can do is look for opportunities for price to trade to the next level of resistance and see how it reacts. And you can see here that I've marked out the 86 spot 50 handle, where we had this kind of bullish candlestick before a very large move to the downside. Now that large move to the downside would have been caused by a key event in the market, and probably was around the time of some significant move with either the yen or with the New Zealand dollar. My guess is it is the yen at that point. I can't remember what situation that was. I'll have to do a little bit more research on that one, but at the moment price has traded through that zone and created quite a large sort of area where price can try and kind of come back and fill this type of area. So what I'm looking to see is if price will trade up from the 85 spot 25 handle and move up towards the 86 spot 50, and if it does, can we look for opportunities to trade to that? So I think we've got two options here. If we just go down into a 4-hour time frame and just zoom in, you can see that price is at the moment trying to trade through the previous structure high. Let me just go to an hourly. It might be able to move it out slightly. So you can see that we've kind of got this consolidation, and price is trying to trade through the high at the moment. So I think one thing you can look for is the potential breakout entry. So if price was to trade through the level, close above the level of 85, 86, which are these highs that are formed in here, then I think you've got the opportunity to start looking for a long. The second opportunity could come back if price comes all the way back down to the low here of the 85 spot 33 level there, where we could potentially see a rejection of the lows and buyers coming back into the market. So I think you've got two options here at the moment, and we'll see which one plays out. I'm favouring more of a little bit of a pullback first before looking long. You could even look for buy limit orders at 85.25, as long as your stop loss can be sort of married with the ATR here on chart partner. You've got the 3-week rolling ATR at 94 pips. So let's say you were 85.25 there and you went for a 90 pip stop loss. You're down at the sort of the 90 94.35s, and that gives you a lot of room to trade up to that 85.60 handle then. So definitely something to keep your eyes on. I'd say it's more of a day trader's move because of the immediate resistance. If we're playing out for the longer term move, you want to be looking to target the 88 highs there. So hopefully that all made sense, and I look forward to speaking to you tomorrow.